Good morning. Happy Fed Day. Big day. We'll see. We'll see. All right. Major support held. And so we had the move down, all the pivot lows. We always look to the left and jiggled around a little bit. If you look at it, what happened intraday, what was the 15-minute chart, 5-minute chart, 3-minute chart, 4-minute chart, whatever you want to look at. There was a little retest. It made a higher low and off it went up into the void above, into the gap fill. Right? It filled the gap where at that point, question was, would it stop there? Would it move up to where there's I guess, a thicker, a more substantial reference point of congestion to the left? And obviously it kept going. And there was bullish price action. You look at smaller time frames, you see some jiggles, a little stall there, but it continued to move up. And now that it reached that level, it stalled. And so at the end of the day, there was an attempt where it was going, okay, we'll dive back down, depending on the day. That does happen. We've seen it happen where you've seen such, I'll use the word amazing, but strong buying. And then later in the day, all of a sudden it falls apart. And it's like, what the hell happened? It's just that, whatever. That's the day. That's the environment at the time. Sometimes, buying, it goes sideways, the anticipation of even higher prices, what we call bullish price action at resistance results in higher prices. And that mostly happens when moves start from the beginning of a corrective process, maybe somewhere further down here where things get started, or a little continuation. You have those kind of days where something's been going up for a long time and momentum stalls, as we've been talking about the momentum stalling. So here's that major support. It went up, it held on to it, and it could have went. I think it could have went either way yesterday. As strong as it was, sometimes traders are just, tomorrow's the potential day where things will change, but that potential isn't until probably 2 or 2:30. So anticipating possibly a little gap up in the morning would have been reasonable. That's where things aren't so black and white as to, hey, you have a trading plan. If prices are at price support and I get this pattern, I go long, and vice versa. Whereas at the end of the day, what will it do tomorrow? Well, it gets a little cloudy at that point. It could do this, it could do that. I'm willing to take the overnight risk or I won't. And you do what you've got to do. So now prices are in the middle of the trading range. They're up a little bit here. They're coming off of the high. They were gapping up a little. Here they are now, almost unchanged. They're probably, I guess, they've got pivot highs here. Maybe it goes a little bit higher, and then what typically happens, things calm down. Qs have been weaker than the S&P 500. Right? So tech that led the way up is now going through some correction. Some things have pulled back, like the semiconductors. Maybe they're going to pull back further. Some of the semis that were up earlier in the day moved lower. It's a lot of bit about NVIDIA, of course, AI, and that's the major theme, and whether conversations whether AI will, well, it's going to be a part of our lives going forward for sure. Will NVIDIA continue to make gobs of money and drive it another 20, 30, 50% higher? I guess we'll just have to see, and whether that's going to correct for a while. So prices are, you look to the left here, there's plenty of pivot highs over there. And so it's not likely to go a lot higher today, ahead of the news. Weekly time frame, you can see just been running in place. And we wait to see what happens later today. Does it break down under here? Does it, we get a consolidation going into 230 and then maybe push higher? We need more information. What we know right now is that prices have been stuck between resistance and support, and it's in the middle of the range. And other than intraday, it's not providing us any opportunities other than day trading as far as indices go. Spiders. So, well, let's back up. I heard yesterday, near the end of the day, they said the S&P 500 eked out a new all-time high. And I was like, really? I was looking at this chart, and I was like, no, it didn't. But the S&P, SPX, and these typically move pretty close together with each other. But we'll look at SPX, and it did. So prices were up a little bit. They're coming back off, pretty much unchanged, maybe down a little bit, no big deal. It's at the top of the pivot highs. So in the short term, what do you look for when prices go from the bottom of the range to the top of the range? Well, we look for sellers to be there. And if it's going to go higher, most of the time it chops sideways for a while. So, or if it takes it out, it comes back in again and it chops sideways for a while before it goes higher. So in the short term, maybe this morning, I mean, if it was gapping up here and jiggled around for a while, we could have a day trading short, but it's just such a small distance between here and here. Probably not much is going to happen either. So based on yesterday's strength, this is, when you look at these strikes on SPX, sometimes it's like, okay, that's reasonable. Not too much is going on. The average range is such and such. And then the excitement as to after yesterday, traders bid up things up here. Let me just check these numbers again because they do move a lot. Things come down. That's where it was before. Yeah, 52.50, 52.45. I mean, I look at something like this, with the disclaimer that anything can happen. I'm like, that's retarded to think that's going to go up there. Why would I think such a thing? Well, it has been going sideways, but it's a whippy sideways kind of price action. It's not that tight. It's not what we might refer to as a bear flag. Meaning, okay, it had a flagpole kind of thing, a wide range bar up and kind of drifting down. It's in a trading range. And to have a strike with premium up there early in the day, we'll see where it is late in the day. Of course, that's where it is right now, give or take. But at that number, at a half numbers and whole numbers, there's more difficulty getting through there because the options tend to cluster around those levels and act as resistance. So expiring today at the moment, just peeking through, that's the largest open interest at 32.50, 3,100 contracts. Now, the 55 is 3,000, so not much difference, but it'd be very difficult for it to get through there today. And that is what you're focused on with any credit spread. In your opinion, how difficult or possible would it be to get through that level today? Or if you're doing a credit spread, a weekly credit spread, in the next 1 day, 4 days, whatever. Right? We do that based on patterns and distance to the contract and time to expiration. And of course, how much premium there is. So getting up there today, especially before the meeting, I think that's highly unlikely. Coming down here today before the meeting, I think that's highly unlikely. So by the time you get to the meeting, who knows what's going to happen? Best thing to do is stand aside. All right. Transports, yesterday we spoke about they're coming down to the 200 period moving average and the pivot lows. Buyers stepped up there, not a big deal. Just typically what happens when prices move from one level to another level and buyers step up and it's the beginning of a turn. We need a whole lot more information because the daily chart's a mess, plenty of congestion overhead. The weekly chart basically is going nowhere. So that tells us pretty much little to nothing other than on that day, buyers stepped up at a logical point where they always do. Industrials, sideways consolidation. Looks pretty good for a sideways consolidation. We'll see if it can break above the highs or what it does here. Trading range, lots of pivot highs up above, lots of pivot highs below. Nobody's winning. So far, the trend, let's call it up because the moving averages are pointing up. This is a huge distance between the 200 and the 50. What does that mean? Well, it means most of the time that prices are going to correct. How are they going to correct? Well, either sideways or down. So far, it's been sideways. This is positive. You got, retests there. You got plenty of retests up there. How long can it go sideways? Time will tell. Maybe today will be a mover where prices either break out or down or keep going sideways. But that is, pretty, you can see percentage wise, 7.5%, that's pretty far. Now you can see how the 50 and the 50 and the 20 are getting tighter. So that, we call moving averages visual aids, meaning do we really need them? No, but they help speed up the analysis, where this is telling us that from here, basically from here to here, over the last 2 months, the Dow pretty much has just been range bound, certainly from here to here. It's been going nowhere day to day. So some of your swings aren't doing as well. Well, this depends on what you're picking, but some of these, this is one of the reasons because the market's just not moving. And interest rates, yesterday we said they're at the top of the range. Sellers should be at the top of the range. They are. And the same thing that I just spoke about, if prices are up at the top of the range and there's a deep retracement like this, which has to be a bullish bar on the higher time frame, what does it do? If you're bullish, you want prices to go higher. Right? Forget that it's interest rates, the instrument. It's XYZ, and you want it to go higher. You want to see it chop around a little bit and maybe get a bottoming tail bar or a gap down reversal, and it breaks out and it goes higher. So right now it's doing what prices typically do. And just comparing the weekly to the daily, this here, can I draw that? Hold on. Come on here. Up. Come on. Oh, it won't let me draw across the charts. Let's see here. But I can do it with this. We always got something that we can scribble with. So what I want to show you here is if you have a pattern like this that has a deep retracement, such as that big bullish pattern, and we say we want to see some kind of consolidation at the top there. Well, look at the weekly. It's starting to form what we call a 1, 2, 3. Now that isn't a breakout bar, wide range bar, but it's a big bar. And so the consolidation, the narrow range bar on the higher time frame becomes a small consolidation on the smaller time frame. And then just explaining multiple time frames. We discussed part of multiple time frames in coaching last night. We'll get that out to everybody. But this is what you're looking for. Inside the narrow range bar, you're looking for information that confirms that strong move up and that wide range bar. So, all right. IWM. Thank you, Rocco. IWM, had a strong move. It's pulled back to the 50, some support, gap down, reversal yesterday. We'll see what it does. The weekly chart still looks okay. And again, what's been this week, a lot of sideways price action and looking for information to support the trends. This looks great. We looked at this in coaching last night. One of the sectors, stores and whatever. You see Macy's and some others that look pretty good. And so this kind of a consolidation getting above here suggests it'll go higher. I got an alert down here just to make sure, but we'll see if it continues to go up. SMH, it's pulling back. It's in an uptrend. We're looking for it to make a turn. A little, maybe another day or two, maybe a little further down. It's got that unfilled gap, somewhere between the moving averages, but it's a strong trend. Looks good. This looks questionable, but it's on that major support. So a broader sector as far as technology goes. XLE, energy, it's a little extended. You got a wide range bar. It's a little extended. It's coming up near resistance. So this is going to reach its destination. It's down here a little bit. It's in the middle of the range, so gapping down a bit. Crude oil is down. So things move around. There should be buyers. Actually, ideally, it doesn't even get down to support. You get a red bar ignored because of the weekly time frame, and it starts to head up again. That's ideally what happens. Clearly, if it breaks down back into here, something's wrong. That's the unknown. We'll just have to see how that plays out. And, let's take a peek at this. This is interesting. So as this is correcting, the S&Ps are correcting, and here you can see it maybe a little more clearer here and here. These option traders have been, it's not an extreme, and that explains SPX too, with that premium up there. They're starting to buy more call options. And it's interesting that they're doing that during this corrective process, because historically what we would really like to see is a more bearish sentiment where they're buying more puts. And this line is coming down here while this is consolidating. And that would lead more toward thinking this breakout is going to be fueled by that bearish sentiment, whereas a situation like this could result a breakout failure. So, we'll see how this plays out. As always, Dan and I, we share our thoughts of what we've seen over the years, and the current environment will dictate what is. But, when I see that kind of bullish option activity during a correction where most would start to think, this is going to break down, kind of puts a fly in that scenario of a solid breakout. But we'll see how it plays out, as he makes his comments today, as we talked about earlier in the week, with commodity prices moving up, agricultural prices moving up, oil moving up. How is he possibly going to be confirming what we've been hearing for the last few months, that they're going to cut interest rates sooner, or maybe they're going to cut them 6 times this year? I think that's out the window. And I've heard others say that. So, which is reasonable. But we'll see how it plays out. Markets move day to day on what's happening day to day. All yours, Dan. Yeah, Bitcoin, I didn't cover that, but that's pulling back further. That should form a buy soon. There's the pivot. And Ethereum, that pulled back further. It's on the 50. Should start to make a turn here.
Good morning. Happy Fed Day. Now, we were talking about this in the green room yesterday, of what we thought the reaction would be. And my opinion is it's going to totally depend on, the amount of hawkish comments. And I just said, I personally think there's a higher risk of disappointment with these higher inflation numbers and so forth. But prior to that, they've had zero fear into the Fed. And I would say, based on yesterday's bar here and the VIX staying low, there's still no fear. And so that's priced in, no fear. So we'll see if Powell's going to create some disappointment. That Honig guy was on pre-market, and another guy, and they're trying to talk down expectations. Raul on YouTube, HCHK. Yeah, this one's on my list already. Yep, I got it over here somewhere. Yep, that's bullish. Alarms going off. Tyson, we are long calls. Looks great. ET, we are long stop or calls look good. And my up alarm went off pre-market. Ollie North. Trying to make the turn here. Sloppy, but the turn at the 200. You said my up alarm went off with this tail up here. PBY. Yeah, that's better now. Yeah, I had this as a short idea, or I'm sorry, a short put idea in the weekend letter, and they sucked the juice out. But let me put it back on the list. Sure. Yeah, Greg just mentioned retail, and that's a nice turn there. Bullish weekly. All right, NDAC gapping down on I think a secondary offering. But today's Wednesday. We bought it Monday. So we've already sold 2/3 position, and we're right around break even right now. Delta 20 asking about driven. Yeah, it's a bottoming pattern, and I'm going sideways. Yeah, I like the weekly. I like the 15-minute. It's an inverse head and shoulder, so that's worth watching. We got here Intel. Government's giving them $8 billion grant. That's spend. Could be a put spread idea. CMG doing a 50-for-1 stock split, and that's creating wealth out of just or not wealth, but shareholder value, which indirectly is wealth if you sell it, I guess. Thing gapping up 142 just by an accounting maneuver. So it's amazing how that's just bullish sentiment. It's crazy though to me. All right, let's go to a couple of these earnings. I don't have many of them. Wolf, nothing. You're gone. ZTO up a buck. I don't know. It's sloppy. Far from the 20. MITK. No pattern. HQY. I said that this would be a great long if it opened flat. And then we'd buy over the week's high. The gap up's messing it up. HRO was up, now down, no pattern. PDD. Big gap. I actually was trying to do a condor on this. I did not get filled. I forget what call strike I was looking at. I forget. I think it was 155. But we were short puts. This was in the weekend letter. We took our money yesterday, but that would have worked if you did hold it. Puke gapping down. That's an ADR, but it's bearish all time frames, although it's extended on the daily now. HT was up, coming in, no pattern, needs to stabilize. Ollie North. Oh, that was earnings. What I mentioned, Ollie. That's why I had it on my other computer. I said if it opens flat, then I like this. So let's put this over here. So this will be a fantastic put spread idea. Maybe 10, 15-minute high. I'll set a new alarm at 76 in case I miss it. Okay, thanks. 76, yeah. All right, alarm set. SIG. Now, this was one we also had a naked put into earnings, but we took our money yesterday because we had, I think, 60% of max value. So that's a nasty gap. All right, so that one was an excellent decision to not sit through. Whereas GIS would have delivered bigger gains. This was up, now down, $5 stock, SRAD, 1080. That's a bullish gap up, but gap's too big. JKS 2450. Now this looks like a fantastic. Oh shoot, I was like, I have this. If this were opening at 2550, I would say that is a fantastic 30-minute low. But it's 2450. So not as good, obviously. And DBX, it's a bottoming pattern in a coma. Another stock in a coma is Daku. No, not Daku. What is it? Roku. Look at Roku in a coma also here. But look at all these tails. So those tails mean it just cannot get out of its own way. KC 341. Nothing. Tiger $4 stock down. Yeah, we're at the end of the season. I don't know what this is, bucket, but it looks like it's going to zero. All right, Ether, yeah, deeper retracement. That's on my list. Return. Tandem is a 1, 2, 3, but I'd like it to go sideways more. CEG made the turn here. I think oil stock, so that looks good. SEG. URI closing breakout. I have an alarm of 695. Boeing getting whacked again here. Greg, I don't know if you remember this. I remember this was in the letter, buying puts here, and then this gap down messed it up. But I said there was a lot. Look, it was cracking right there with a void. So that worked out as planned. It's just the gap messed it up. But look, this prior low is 176, 175. So this is on my list for a put spread. It's buyers are stepping up here. I don't know. I'm not doing anything, but we'll see what happens. No, of course Roku's not ready. We need a something bar. IBM. It's range bound. I don't like all those overlapping bars there. CVX, another oil stock. That's greater than 100% retracement. It's on my list. 1, 2, 3 on the weekly. Massey on our list from yesterday. I have an alarm. There's our CHK, Intel, a lab, wrong symbol. BHE, no symbol. SMCI. They talked about a secondary offering. I don't know if that was old news, but this has been on my call spread playground list for weeks and still looks lower. We might consider doing one for next week. TGL, gap's too big. Hollow, this is some type of toy. Looks like it came out of a SPAC or whatever. But it might be making a bottom here. So let's keep an eye on that. All right, Tyson, up alarm. Let's see. We have long calls. Low, about 56.58. We have the 55 calls. Let's see. 55 calls. Oh man, what is wrong with this market maker? I have never seen this on Tyson. They're 55 cents by 470. But you know, that bid is retarded because you got $2.70 of intrinsic value. So I know we can get out at 270 intrinsic value by definition. So let's sell half for a nice gain here. And I'm just going to add a dime of extrinsic value. So that would be at 280. Let's try 285 a share. And if you all don't understand what I said about extrinsic and intrinsic, then we can talk about it later. There, it's at 84 now. So yeah, you got filled, guaranteed. I'm not in it myself, but guaranteed you got filled because it was 100% intrinsic value. Holly North alarm. See, look at Boeing. Look, Boeing's negating bad news. They said they were gonna. They said, um, you know, they're gonna lose 4 to 4.5 billion of cash on the first quarter, and it's working on negating the gap. That is bullish, and it's near major support weekly, and hence why I said it's on my put spread list. If it don't go down on bad news and we get high premium, that's a perfect scenario. Wow, Tyson is flying. MGM alarm, nothing to do yet. SMG. This was a naked put idea in the weekend letter. Ollie North, I said over 76. Put spread idea. Ollie North, see if there's juice at 73. There's no weeklies and they're spready, so mess that up. All right, NDAC 5-minute low holding. But let's try to sell at 61 to get out of it. Yeah, my alarm went off, Scott, but I haven't gotten to it yet. All right, here's our new strategy. URI alarm. I think that was you, Alex. That's $600 stock. Uh, yeah, 695. It looks fantastic. It looks fantastic. It's just, you know, Fed day. I like Target also. Let me see what puts are like. This to me is very bullish, negating bad news on major support. Let there be juice. The 175s are only 32 cents. That is insanely low for, bad news stock. Myrna, low alarm. 101.51. Where's our stop? Our stop is, we're short the 99, so it was just an early alarm. Q spiders breakout failure on the 5-minute chart. As a reminder, we typically get noise or